Hey guys, welcome to This Week in Crypto for February 9th, 2018. This week as we kick off episode 6, we're going to dive into a bit about market health and what we observed in the Zen hearing on cryptocurrencies and a lot more. As we start off, we can see that Bitcoin is hovering around 8,200, while Ethereum is playing around the 800 mark, and Litecoin is pretty much dancing around the $149 to $150 mark. It's good to finally see some positive move up in this market, but I'm not totally convinced yet. What I would like to see is Bitcoin move a bit sideways so that we can build up some pressure and allow for a large upward swing, but it all depends on the volume. We did see a large amount of volume, which surprised me even back when we dipped under the 6K zone, which does tell us that we have people waiting to put money into this market. It's just that we have to be patient. Since last week, we decided not to report the news and rather have a bit of a heart-to-heart in remaining centered during all the FUD that was being thrown our way. Basically, keeping our wits on end. But this week, we can get back to the news and see what we may have in store for us and what may be affecting the markets and what may be pushing it back up or not. So late last week, CNBC reported that apparently Mark Zuckerberg, for those of you who don't know who he is, let's just say Facebook, had announced that it would be banning all ads for ICOs in crypto and what is called financial products and services frequently associated with misleading or deceptive promotional practices. Now, I find this interesting that the social media giant basically bans crypto ads, which I'm not saying all crypto ads are good, but at the same time, not all crypto ads are bad. But it's banning crypto ads, and it yet has to take action on issues like fake news, hate speech, cyberbullying, and things that have been affecting a lot of people for a lot longer than crypto. Now, this ban will also be affecting other platforms where Facebook sells ads, such as Instagram. So we probably won't be seeing anything crypto-wise on Instagram as well. So on other big headlines, Samsung has confirmed it's manufacturing specialized crypto mining chips. The Bell, which is a South Korean news outlet, basically broke this news first, and they found and reported that Samsung started manufacturing ASICs, or application-specific integrated circuits, to an unnamed Chinese mining firm sometime in late January. Now, this is really interesting because Samsung's move into the crypto mining space is going to undoubtedly bring some serious competition to Bitmain, which is a Chinese-based mining company, the same Bitmain that we talked about in previous weeks. Currently, though, Bitmain claims it holds 70% of the market share and uses ASICs from a Taiwanese manufacturer, TSMC. So this will be interesting to watch. Also, Ripple has landed its largest client since coming on the scene with Santander Bank's UK division. Ripple basically just announced a mobile app powered by the company's distributed ledger, which the bank had been piloting for about 18 months with its employees. Now, the app integrates Apple Pay for payments between 10 to 10,000 pounds, which is about $14,000 to $14,000. Now, currently the plan is that it will be rolled out in Spain, Brazil, UK, and Poland. And this is according to the company's 2017 earnings presentation. Customers will be able to see the app to facilitate same-day cross-border payments, and this is supposed to take under a minute. Now, according to, again, the company's earnings presentation, the app will also provide a digital wallet, a personal finance manager, and help for, or aid, basically, in person-to-person payments. I have to say something, though. I have been waiting for a product from these guys, and now we actually have it. So at least now we can watch Ripple's progress and blockchain technology and decide if it's worth the investment. I'll give it to them, though. as much as I don't like Ripple, they actually have a working product out, and that says a lot compared to many of the other altcoins out there at the moment. As we move on, we all know about Charlie Lee. He is the backbone founder of Litecoin, and formerly he used to be the director of engineer over at Coinbase. Now that bit of information you may not know. He's actually taken some bold steps in the crypto world. And back in December, Lee announced in a Reddit post that he had sold and donated all of his Litecoin because he said it was a conflict of interest. Now, in January, Lee tweeted a proposal for a Litecoin soft fork that would allow for basically a new type of fee, like a fee market to develop for the altcoin. Now, at this year's Blockchain Connect conference in San Francisco on January 26th, Charlie Lee stated, quote, "Long term, I'm very bullish for Litecoin and Bitcoin price-wise." Though he also stated that for the short term, the fluctuations are going to be drastic and they can move in either direction, so it's going to be hard to predict. Moving on, a Canadian-based firm, Harvest Portfolios, plans to launch Canada's first blockchain ETFs and has officially been granted the ETF. The Ontario Securities Commission has approved of the Harvest Portfolios plan to launch the country's first blockchain ETF, appropriately titled Blockchain Technology ETF. Now, the new venture will carry the HBLK ticker, as well as a management fee of 0.65%. The country's first blockchain electronic exchange trade fund is set to mirror the performance of the Harvest Blockchain Technologies Index, which tracks the performance of issues across the blockchain industry. And to be honest, it focuses on North American exposure. As we move on, Quantum, a blockchain project focused on decentralized applications, or DApps, announced on Twitter that the first ever space-based blockchain node made by Quantum has been launched on a Chinese satellite. Now, what does that mean? So Quantum's DApps are unique from those based on the Ethereum network because the platform uses an unspent transaction output blockchain model. What that means is it enables more lightweight smart contract interactions with mobile and IoT programs. Quantum is also partners with Space Chain, a space exploration initiative aimed to building an open source satellite network. So this is going to be interesting, especially considering that their goal is focused on storing data in outer space, which would definitely eliminate potential problems with government regulations. It's kind of interesting and funny at the same time. As we keep moving forward, we see more and more companies jumping onto this blockchain technology craze or fad, while some are actually looking at ways to utilize its and harness its power. So, according to the United States patent application, which was filed back on the 1st of February, UPS, mind you that FedEx as well, at one point was looking into this, and FedEx has already started looking into other applications of blockchain, but UPS has plans to utilize Bitcoin as a method of payment for a new decentralized locker system. Now, according to the patent, UPS is constructing and let me just read it out, quote unquote, secure computerized locker bank that is adapted to facilitate the payment for and physical exchange of an item between entities who have brokered the sale of the item via a marketplace. So the word Bitcoin appears throughout the patent application many times, and that really indicates that the dominant cryptocurrency will likely be and possibly a viable method of payment. So this is something that's going to be really interesting, especially now that SegWit and Lightning are starting to be implemented. In other big news, 3 of the most important banks in the United States basically decided that they were going to ban cryptocurrency purchases on credit cards. These banks were JP Morgan Chase, Bank of America, and Citigroup. And as you guys already know, my bank had already done this a while back for Capital One. Now, these important banks are basically expressing that they don't want the credit risk associated with transactions. Mary Jane, JP Morgan representative, was basically talking with Bloomberg to explain the situation. And basically commented in an interview that JP Morgan Chase doesn't want to take any risk regarding cryptocurrency transactions. And that's why Coinbase, one of the most widely used cryptocurrency platforms, has recommended its users about the situation. Now, guys, if you're buying cryptocurrencies off of credit cards, I'd stop. That's not a smart thing to do, especially considering the fact that they're adding another percentage on there for you to purchase your crypto. So you're getting less for what you're paying. That on top of it, if you have to use a credit card to purchase crypto, you're spending more than you can afford. Let's be real, and that's just a recipe for disaster. And we keep saying this over and over again. Only be willing to spend what you're willing to lose, and it makes no sense to put yourself in debt in hopes that these prices will increase and make you riches, because it can easily go the other way around very quickly, very fast. So as I was going through the reports today, what I found was this new company, or this new scheme called ETH pyramids. If anyone's thinking about investing in ETH pyramids, guys, I want you to really think BitConnect. I mean, it's in the name itself. ETH pyramid. Really? Pyramid. Like, let's not get caught in a pyramid scheme. So, how do I put it? Just don't do it, guys. As I was looking at this, there's a huge element of concern right now, especially considering BitConnect was just literally yesterday, so it seems, and another pyramid scheme evolves, and this is going to be something that the SEC and whatnot are going to be looking at. So let's not fool ourselves, and let's definitely, for those listeners that are out there, don't dive into ETH pyramid, please, if you're thinking about it. The next bit of news is kind of interesting, and I actually like this. It's basically UNICEF recruiting gamers to mine Ethereum as it's trying to adopt blockchain technology. And basically the UN has decided to adopt blockchain technology in order to revolutionize its aid supply methods, which, you know, is a step toward creating transparency in its financial system. So the pilot project, which is by UNICEF, is part of a broader project by it's basically to explore various ways that blockchain technology can be used. But UNICEF is settling for Ethereum, the second largest cryptocurrency after Bitcoin, all in the bid to basically ensure transparency of its finances and whatnot. So this is something that's really, really interesting. And let's not forget, let's also take a look at how Ethereum has already been in the forefronts of helping, right? The World Food Program, or WFP, adopted the Ethereum network basically a while ago to distribute its food to refugee camps, and that alone has been a great success so far. Through Ethereum, it's managed to distribute about 1.4, 1.5, I believe it's $1.4 million of food vouchers using, get this, iris scanners in camp supermarkets for Syrian refugees in Jordan. And it plans to extend this to 10 other camps. Now, that alone, and the Jordan project was a follow-up of a really successful one that was launched a year prior to it, which was in Pakistan. That alone can show you that Ethereum's already been in this humanitarian aid front, and UNICEF just wants to jump in and also use that same blockchain technology to basically, like I said, make what it does easier and transparent. Okay, as we move on, this week Forbes ended up releasing its wealthiest crypto or crypto rich list, right? And guys, take this with a grain of salt, because let's keep in mind that even though this list has a lot of people on it, such as Chris Larson, surprise, surprise, Ripple's a key player in Ripple. By what means did we suspect that Ripple wouldn't be on here, considering that they hold 60% of the tokens anyways. It's just a little. It doesn't surprise me. Joseph Lubin, who's the co-founder of Ethereum and Consensus. We've got the CEO of Binance, obviously the Winklevoss twins, and so on and so forth. But let's keep in mind that not all these guys are, not all the top richest, our first ever cryptocurrency rich list isn't complete. And the reason I say that is because there's a lot of people that don't want to be singled out as being filthy rich in the crypto world for multiple reasons. One, security. Two, they're painting a target on their back. So, this is, to me, I think this was kind of irresponsible for Forbes to do. It was just one of those fluff pieces that it wanted to do. Obviously, now that the Senate hearing has gone through and things were pretty positive, but to kind of lighten the mood and make it better. But it has people like Michael Novogratz, who's a huge hedge fund manager, and then ended up switching completely over to the crypto world and the crypto space. So again, take it with a grain of salt. Not everyone who is anyone or who is rich in the crypto world is on here. And honestly, I wouldn't want to be on this list, because that would just tag me for as many malware, anyone out there to target me, basically. So definitely not a good idea. As we all know, Binance has been down, I believe, since yesterday, and they've been refuting accusations of a hack. Currently, they've been tweeting, and they've been tweeting quite responsibly about when it'll be up and when trading will continue. But at the moment, they're saying February 9th at about 4 a.m. UTC is when they're expecting it to be up again. And it was, according to Changpeng Zhao, the CEO of Binance, he basically said that no data was lost, and it was basically a database error, and they're just resyncing that database up, which was backed up and whatnot and on the blockchain. So kudos to the blockchain. But we're going to kind of keep an eye on this and see what's going on here. There's some interesting news. Berkeley, obviously in California, is considering launching an ICO to fund affordable housing after the fears that President Donald Trump, obviously, will cut their federal funding. Now, their goal is basically to try to not have to rely on federal funding. Ben Bartlett, a member of the Berkeley City Council, created a group working on the ICO launch with Berkeley Mayor and the UC Berkeley Blockchain Lab, as well as fintech startup. And he sees a turn to crypto as a way for the city to resist the current presidential administration telling and kind of bossing them around. And he said that Berkeley is the center of the resistance, and for the resistance to work, it has to have a coin. Now, we all know Berkeley is a sanctuary city, meaning that it doesn't cooperate with the federal government to enforce immigration law. The Trump administration has recently seen escalating the fight against the existence of sanctuary cities as part of their immigration quote-unquote reform. So last year, Trump had also tweeted a threat to pull federal funding from UC Berkeley, a university located in the city, after student protests led to the cancellation of Milo Yiannopoulos' scheduled speech. This is Berkeley's response to that and whatnot. And the ICO could also be a way for the city to help the increasingly homeless population, regardless of whether federal funding is ever cut. The token would be backed by municipal bonds, which I don't really understand. You're backing a token with government bonds in a hope to alleviate dependency on the government. So that's kind of, I really can't get that. But we'll see. Maybe it'll work. Give it a chance. And it's going to be backed by, like I said, the municipal bonds, and governments usually issue those when they need to raise funding. However, in this case, these securities would be digital assets that the buyers could potentially spend. And they could spend it in crypto participating shops in the city, or even for apartment rentals that would be accepting the token. So this is going to be an interesting project. It's going to be something to keep an eye on, and possibly a way for cities to get away from federal clamping down, federal sanctions and whatnot. So now, let's get to the big news. The SEC, basically the hearings that went on Tuesday. Bitcoin and the altcoins received a lifeline from American trading regulators, and it was very unlikely, which ended in a complete turnaround after a nasty market crash. We saw some stability after that hearing. The Commodities and Futures Trading Commission and the U.S. SEC, which is Securities Exchange Commission, held a hearing on Tuesday and focused their stance towards cryptocurrencies, initial coin offerings, and blockchain technology. This came at a crucial time as a lot of the cryptocurrency market was enduring a spiraling sell-off, which saw Bitcoin reach lows that were below $7,000, something that hasn't been seen over months, and I'm talking like 5-6 months. Industry experts took a social media platform posting updates and on what they were hearing from the FTC chair, Christopher Giancarlo, who surprised me and had nothing but good things to say. I was hoping for the worst of the worst, but good on them. And the SEC chair, also Jay Clayton, made some highly influential statements about the current stance towards cryptocurrency and the blockchain space, with a prevailing sentiment of fear, uncertainty of doubt, and negative stance from the two bodies that hold the future of mainstream cryptocurrency trade. This could have been a really easy death blow, but both the CFTC chair and the SEC chair basically said balanced and positive sentiments towards the crypto and blockchain technology. Giancarlo delivered an upbeat address basically saying that, quote, if there was no Bitcoin, there would be no distributed ledger technology. He also made it very clear in his written testimony that cryptocurrencies are here to stay, and that regulation needs to nurture the sector while basically protecting investors. I'll read you exactly what he had over here. Virtual currencies mark a paradigm shift in how we think about payments, traditional financial processes, and engaging in economic activity. Ignoring these developments will not make them go away, nor is it a responsible regulatory response. The evolution of these assets, their volatility, and the interest they attract from a rising global millennial population demands serious examination. Now, the funny thing was the SEC chair, Clayton, also echoed the same sentiments, but he also produced a discourse that gave credit to the cryptocurrency industry for adding a new paradigm to the financial system. And he went on to say that, quote, distributed ledger and other emerging technologies have the potential to further influence and improve the capital markets and the financial service industry. It was really interesting because after these statements and after the hearing, the market reacted very, very favorably. The overarching reaction following the hearing was positive. Bitcoin and Ethereum saw a 20% growth in value, basically within the 24-hour period. But like I said, I'm going to wait. I'm going to see where they go. Eventually, we do know that the market will go upwards, but personally, I think it's good if it stays a little stagnant within the 2,800 range for Bitcoin and whatnot. A little sideways motion, a sideways action is healthy and it's good. The more it moves sideways, the more pressure it builds to shoot upwards in a healthy way. So as we move on, another piece of news which I thought was interesting. Was Mario Draghi, the president of the European Central Bank, and he made an interesting statement about Bitcoin, where he talked a little bit about where is this? Hold on, let me find this here. Basically stating that European banks could potentially hold positions in Bitcoin. Therefore, they're taking a look at that. Now, that's a huge thing. Right, in the U.S., you have Goldman Sachs here saying it's going to go to zero, and all these like pundits in the financial market saying that this is all BS and whatnot. But then you have a central bank out here coming out and saying, actually, there may be something to this, and we may own it. Now, I can promise you that there is a lot more to the story than what we're seeing in this article. There is a huge strategy behind all this and these headlines. So there are objectives that people have that we don't know about. But regardless, this is really interesting that a central bank is coming out, not only talking about it, but saying that it's something we can't ignore, and it's something that we may own in the near future. And so this article, to me, is basically it's progress, and it's progress that of the sorts that is infectious. So let's think about this for a minute. The European Central Bank owns Bitcoin by making it illegal or by having some very, very strict laws. It changes the liquidity, and it, as a completely international, as a mine currency, eventually it's going to screw them over. It's not like they can sound like gold or whatnot, or they can't hoard it and whatnot, and then you can stop the flow of it, because it's digital currency. Unlike gold, it's not heavy to ship or bulky. Now, I don't know if this is bullish. I don't know if it's going to make a huge difference in the immediate, but what it will do is it's going to become infectious. Other banks are going to start doing this. Other central banks. So this is a bigger deal than we can even think right now. But it's time that's going to tell. And if you think about it, if the central bank is coming on board, it's going to be a domino effect. And not only that, is we're not going to have this making cryptocurrencies illegal or whatnot. So now with that in mind, I want to go back and refocus on the hearings that we saw. Or if you didn't see it, it's over at cryptocoinguru.net. You can also check it out there. You can rewatch it. It's long, so you can watch it at your leisure. But as we go through that, we also need to take a look into, as everyone's bullish about what's going on and all the great things, we need to take a look at what it means, or what it requires to become a registered security. And that was one of the things in the hearings that we heard about. Now if you go to the SEC .gov website, there is a brief summary on registration under the Securities Act of 1933. It's basically an overview of what's required. Basically, you need to file with the SEC. You need to show them that you're a legit company. You've got a team. You show your financial forecasts. You should do a preliminary earnings. the 10K type of filing that you put in the Edgar database so that they can decide whether or not you are or this is a legitimate security that people can invest in. They will approve or disapprove of the security status based on whether or not they think that you're going to rip people off, or that there's a chance that the company could fold or go under. So they're looking at how legit the company would be and not vaporware. So that in itself obviously is a broken process in itself. But if you go through this and you think about it, let's just say an ICO, any ICO. I mean, let's just say Ethereum, right? Since it was an ICO at a point. And imagine that they had to go through and register a security, which may happen in the next 6 to 12 months. If you look through the website, and if you look through what they require, it's not cut and dry. There's a lot of things that go into this. There's a lot of a lot of things that they need, like a proof of solvency of earnings that need to be justified. And the problem is that the way crypto is valued and the way that tokens could potentially provide return for their investors is very different from coin by coin, and very different from equities and any other security for that matter. So this system isn't going to fit that well into the crypto world. So when you actually take a crypto asset and you try to put it into the security box, again, this is just my opinion, this is purely my observation, it's going to be a hard fit. How are you going to report on it? What are you going to report on the 10K? The 10K is basically the filing that you make with the SEC with generalized earnings reports and all that good stuff. So how are you going to show how much money we're going to make, or what we make, or we own these patents? But that doesn't work in the crypto world. So the question becomes, does crypto need to become like a formalized equity company that just has a token? Or is the securities or the securities framework going to have to change? And obviously what 99% of the people who are in the establishment are going to say is that they're going to say, yeah, right, the security laws, they're not going to change. Crypto needs to change. But if we look at it, and I believe this in a very optimistic manner, and this may be reality or not, I think we as a community, as a generation, and as a revolution in many ways, if we can get enough momentum, enough drive of demand, if we can lobby hard enough, we can actually change the way that the securities are done. And this is something that was alluded to during the Senate testimony, that there is a huge thing that has to be addressed. If crypto can't fit into the registration laws under the 1933 Securities Act, that it's going to slow down and possibly kill the innovation that crypto is bringing to the forefront. And that's one of the huge reasons for you guys to stay educated on this topic, and optimistic regardless of the price, because what we're going to have to do is we're going to have to eventually play by the rules that are already manufactured for the short run, until those rules are changed, or until we find a way to work the system and fit crypto into the system. But what it will do is it will validate that this system, or this crypto, or this blockchain is not BS, is not a scam, but rather holds a legitimate value. And so it's going to be a process that's going to, it's going to take time. And again, I'm trying to be really optimistic about this, but the truth of the matter is, right now, there's a set of rules, and they're looking at crypto through it and saying that it fits into the box. But when they try to actually do this, it's going to be a really messy thing. Crypto doesn't fit into the securities regulations that well. And, like I said, time will tell. Okay, moving on. I don't want to beat a dead horse. Time's going to tell. We'll see exactly what happens and whatnot. So we're just going to move on here and see what happens. A little bit else in the news here. Bitcoin mining comes to New York. This is really interesting. Cloud mining services CoinMint was basically won the approval to take over an abandoned smelter for Bitcoin mining. The agreement that they're going to be obviously pandering over is the New York Power Authority Board and the New York State Canal Corporation Board of Directors in how much electricity and whatnot and the operation, what it should involve, and all that good stuff. So, this is a good start. We start to see more states follow onto this bandwagon of crypto something, blockchain something. Now, remember, it's a large allocation of power to mine, right? But the good thing also on top of that is about 150 jobs that would be created in this venture is nothing to take lightly. All right, guys, with that in mind, if you want to check out more info on crypto, more news, if you want to, get involved more, learn more, join the member section over at cryptocoinguru.net. Get the detailed breakdown, the technical analysis, all that good stuff. If you're already a member, awesome. If you know someone that could benefit, point them out towards the podcast and help a friend out, help someone out. Get involved with the CCG family and learn to invest wisely. Again, that's cryptocoinguru.net. And remember, it's not about just getting rich quick. It's about growing your wealth. It's about watching you guys gain wealth and then us working together to help other people gain wealth. There's enough to go around, and we can definitely make this happen. Again, if you like what we're doing, you want to donate a little bit, definitely you could send us Ether or Litecoin, and the QR codes are going to be right on the pic for YouTube, and even on the main site. All right, guys, that's it. That's about it, and we'll see you next week on This Week in Crypto.